Black Friday once again, and this time it is the US Fed chair. He perhaps for day to day is the most hated person because he has started an avalanche sort of thing in the global markets. We are already dealing with a situation which is not too pretty. Germany's chancellor was evicted. Canada might have a new PM soon. US, the deadline is tonight when the government will run out of money. Few days, expect some services to be impacted. And crypto, there is a calamity kind of situation. Bitcoin has dropped 10%, Ethereum has dropped 20%, and remaining coins have dropped anywhere between 30 to 50, 60%. And I'm talking about the bigger popular coins. The comical part is all of them are probably where they were a week back. There is panic, there is chaos, and people seem to have lost fortunes. They were the exit currency. In domestic markets, it was yet another red day. Nifty continuously down. No attempts to recovery at all. Bank Nifty looked similar. And there was no place to hide. All Nifty stocks, all major indices. Let me just zoom the graph. The big boy Reliance hit a 52-week low today. And while retail right now is in absolute panic mode, if you see in this top list, only 2 stocks are red right now. Everyone is in green. In today's Nugget, I'll talk about 5 reasons, actually 6 reasons, why this fall, in my opinion, could get worse. Yes, we may have relief rallies in between, but this could be a long grind. Nifty, the reds increased considerably from yesterday. The top belongs to pharma today. Also, DRL consolidates at number 1. But today, there was no match to bears yet again. The big boys were down. So here, number 1, number 2, number 3, number 4, and number 7. Next 50 also, pharma at the top, Divi's Lab, but a bunch of reds. Siemens hit a lower circuit 10% because they said that the expenditure is not happening in their desired segments. They gave a bleak outlook in the conference call, and that took a lot of stocks along with it. ABB, Power Finance, because Siemens and ABB deal with power equipment. This probably was a little overdone in my opinion because the impact on PFC may not be that high. And I talked about Bajaj Holdings yesterday, that came crashing down 5%. Today, everything was crashing down in any case. There was only a tail today, that is because 0 sectors were up. The sectors making money also have vanished. Only hotels are making a little money. This situation has turned on its head in just 1 week's time. Most of you would be tired of seeing the reds this week, so I'll skim through the dashboards quickly for today. Today, volumes were high across the pack. Banks are looking terrible. The ICICI 0.1% also I'll probably attribute to the Sensex expiry today. Here also very high volumes, and it is not unusual to see IndusInd hitting a new low. The entire pack of private sector banks was sulking today, and the usual suspect RBL Bank also, that was down most 7%. This pack also had high volumes. People were throwing stocks today. This is the sign of panic. Nothing very different in public sector banks also. Big reds, high volumes. This was bound to happen. The investment pack had a lot of profits, and on a bad day, this was going to crack only. Sad part is that the stocks that were not up too much, they were also hammered. HDFC, AMC, Motilal Oswal, JM Financial, and in today's market also, BSE and KFin Tech hit new highs. Everyone probably believed, looking at Accenture's news yesterday, that IT will be up today. And IT actually started up only. Most stocks started at the highest point of the day and then they fell. Accenture's guidance was high because of the favorable dollar or the currency. They did not ever talk about improving business conditions. And the false alarm made 4 stocks go up to 52-week highs, all-time highs. Think of the people who got trapped here. IT is due for a big profit booking. I don't know whether it is coming now or it will be later, or it will be a slow grind. Most sectors had no place to hide, including telecom. The largest player, Airtel, the fall was not much, but Airtel in any case has been falling only for last 5-6 days. And Tejas Networks, which was dancing all over the place about a month back, that is falling like 9 pins right now. Not a single stock green in auto, and the exits were on high volumes. Similar story for auto ancillary, just that the cuts were bigger. Zen Technologies was up today, also hitting a new high. This sector is seeing huge volumes right now because people see that the budget is not far off, and there is in general anticipation every year, especially since last 2 3 years, that this sector will get goods allocation in the budget. On a day like today, there is no option for metals, they have to fall only. Vedanta also is now out of the greens. Metals are fast turning into a red sector. And this is not China alone, this is domestic demand also now. Oil and gas also down with big volumes, 2% cut for the entire sector. The sad part, which I realized the hard way, is that in our country, most people cannot differentiate between oil marketing companies and refiners. These also are refiners, but they are more of retailers. And when the fine print will get clear, these stocks will go up 80-degree literally. Siemens spooked the power sector completely today, and Siemens has already said that it will take 2 3 quarters for business to resume BAU mode. So this sector is going to take a lot of hits going forward, at least if the fall persists. Today, even the defensive sector was not spared. Pharma also is red. But pharma was looking better in the initial part of the day. Most stocks were fine. See here, started well, then came down, started well, came down. Not a single red and a lot of green as of now. The entire sugar pack cracked today and the cuts were big. Consumption has been weak throughout this quarter. There is no chance that consumption stocks will do well in days like today. Nestle and Tata Consumer hit fresh lows. And today I was studying the results of Nestle yet again for the last quarter. I actually did not see any problem because of which Nestle is being thrashed every day since last 2 months. Non-edible pack corrected more than the edibles, that too on high volumes. DMart hit a new low. What is probably happening right now is the hands that entered in last say 5 10 days, 15 days in consumption stocks, they are exiting at 4 5 6% kind of losses. The old timers who have stuck on till now, they will not sell at these prices. On a bad day like today, people want alcohol, not alcohol stocks. They were thrown on the streets. Railways also down, but on low volumes. IRCTC hit a fresh low. Not a single green stock in the entire Tata pack. No place to hide for any Adani stock, including their financiers. Everything down anywhere between 2 to 4%. The reds just got bigger. There is no point in talking about these percentages. Everything was down. Indices 2 to 3%, and FIA sold 3,600 crores. DI tried to support the markets, but their purse size is limited, 1,400 crores. This number is getting close to $2 billion, and FII's net sell number also is now 4,000 crores. Rupees now above 85, Bitcoin is below 1 lakh, and Brent is back to 72. My trades for the day, today Power Finance was down nearly 5%. So I bought Power Finance. Remember, I sold Power Finance somewhere around 508 and I regretted that at that time. Today I got it probably 30-35 rupees lesser. And I was missing money in my bank account, so I sold. These sells are from one specific portfolio right now, and most of them are actually old stocks. In fact, IOC that I sold today, that was in my account for more than 1 year. And some of these stocks I bought in the fall during 4th of June, the election result day. Of course, Praj, etc., which I bought recently, I just sold them at no profit, no loss. Apollo Tire, there was a little loss. I am trying to get out of oil, especially the refiners right now. I had RIL, which is zero now across portfolios, ONGC zero. I still have Oil India. And IOC, I still have a lot of that in my other portfolios here also. I think IOC will fall because now crude is again back to 72. People will not differentiate between IOC and ONGC. Titan, I think it will get punished because people feel that Titan is a weak stock right now. Let's see, for now there is some cash in the hand, and let's see how the next week goes. How next week will go, I think it will not be a very good week in general. There could of course be a relief rally, but why I am thinking right now that markets may sulk for a while, Let's talk about that in the Nugget section. First point, let's start with consumption. I think we are having a deflationary kind of situation with consumption, not inflation. And there are two elements of it, urban and rural. Urban is hugely impacted because since pandemic, people have spent a lot on vehicles, on houses, there are EMIs running. Even zero cost EMI, you have to pay a monthly installment. Some employees are facing joblessness also, say 1 in 20 kind of situation, 5%. But those 5% impact the decision of at least 3, 4, 5 people more. So this percentage gets higher in terms of people who compress demands. And in general, the prices of everything, including cars and real estate, have gone up like a rocket any case. A lot of people whose salaries are low are not able to afford them. Rural consumption, microfinance, while people might say that the stress is say 2, 3%, 5% kinds, one thing I must tell you is that suppose in a village where people are taking loans, there are groups of people, women, which have say 5 people. Now this phenomenon also is changing, but typically if one woman defaults, this entire group stops getting loans. And if multiple groups start defaulting like this entire village will be banned. There could be 3 people out of say this 30 kind of village who are blocked right now from taking a new loan because they are not paying. But the remaining 27 also will not get a fresh loan. The cascading impact across India for microfinance is huge. That is why I am not averaging down in microfinance at all, though companies are down 60-70% right now. This situation will clear also automatically, not automatically actually, painfully, in about 2-3 quarters time. But till then, this will impact rural consumption. There is no money. Next point is important. We are in denial mode that something is wrong. And a lot of people will disagree with me on this point just to prove my point. We don't want to face the reality that there is a lot wrong with the economy. The inflation part is a lot higher than what we feel is the real inflation number. The demand part is not there. The vehicle inventory problem is real. We are having an artificial view of the real estate inventory, the stocks going up and all. It is not good at all. People who are buying right now, they will get stuck. So all is not well. Q2 numbers, the GDP numbers, they were not good and we can't ignore them. That is not an anomaly. That's a side effect of a lot of things happening together. Too much dumb money sloshing, and I don't want to use a derogatory term here, but the money right now in the hands of retail, I call it dumb money because people don't know what to do with the money. The only thing they want to do is play in the stock market, willing to lose the money taking risks, but want 30, 40, 50% gains, at times 20% every day in every trade. Just take my money. This is a wonderful situation for the larger and educated traders with sophisticated systems. They are more than happy to take the money. So that is why I call it dumb money. You might have seen the meme floating around right now. An IPO, 10 crores. There were applications worth a lot more than that. So that is dumb money. People don't even know what that company does. We don't want to export. Rather, it is too much work. We don't want to be competitive. A lot of exports we have lost to countries like say Vietnam, Sri Lanka. All of them are a lot more competitive. They are hungry for money. They want to work hard. They want to export. They are cheaper than India. The forte India had in textiles, tanneries, all of that is gone. Cambodia is exporting more clothes than India these days. Sri Lanka is exporting better shirts than India. We want to import. We don't want to produce. My favorite example, India has the largest coal reserves in the world. Yet we import more than 50% of our coal. Why? Why can't we get a better person to head Coal India to increase the production? Do we don't want that? For any reason? We had SGB to counter gold imports. We don't want that. We want to import gold. Currency is going down. Even dumbest of produces, which are easiest to create and easiest to store, onions, we import for at least 2 months in a year with so much land around us. What are we doing here as a country? The final one, there are a lot of changes happening around us. I'm not saying they are bad changes. Rules are changing, tax laws are changing. people are totally confused what to go for. There's so many people who ask me, if I sell, will it have 2 minutes of tax impact on my portfolio? There is a lot of influence of these changes on retail decisions. People don't understand these things because they have happened in very quick time. I was just seeing a meme today that there are 4 variants of popcorns with different GST tax rates. It's not a complete set, but I just wanted to bring in a perspective that the macro is changing right now around us, and people are no longer comfortable right now. It is not infinite money via SIPs and retail, which is going to drive markets up yet again. Things are changing right now. At some point, retail will pull back. At that stage, DIIs will not be able to rescue. That is the problem I'm fearing. I'm fearing the day when DIs might have to sell under pressure of redemption. That will be Armageddon kind of day. Let's hope it does not arrive. Hope this was useful. Have a fantastic weekend. Have good rest. And Monday, let's hope that the markets don't fall as much or maybe recover a bit.